The markets traded indecisively today. As you can see, there was a doji again in the Dow after a shooting star type doji on Friday, with stochastics up here in the overbought area. We were looking for wave 1, wave 2, wave 3, which was getting relatively close to the same magnitude as this wave right here. But more importantly, the indecisive trading is occurring right at the same level the markets topped out a month and a half ago. That becomes relevant, not because the market might be overbought here, it's because everybody else can see this is where it topped out, and that's where they're making their decisions. The Nasdaq, after a hanging man type signal on Thursday, a lower trading on Friday, and now a bearish left-right combo, gives the distinct impression that they could be coming back to test the T-line, or they could be coming back to see if the 50-day moving average, which had been acting as a resistance area, is now going to be acting as support. In either case, it tells us any new positions being added to our trading probably should be oriented toward the short side, whether it comes back here or comes back here. Then you make new decisions once you can see what's happening back at the 50-day moving average. The S&P 500, same scenario. Doji, hanging man type signal, lower trading, still all done at the same level as where the markets topped out a month and a half ago. Today's little bearish left-right combo also adds evidence that they could be coming back to test this level, fill this gap, or coming back to test the 50-day moving average. So any weakness in the market indexes or the pre-market futures would be instigation to add a couple short positions with any free cash right now to the portfolio. Determining whether to stay in a bullish pattern or taking profits is also predicated on knowing what type of signals and patterns should be occurring at existing potential resistance levels. For example, our recommendation on CVM was based upon a bobble breakout. Notice when it failed at the 50, pulled right back to the T-line, and when it came back up through the 50, telling us the 50 was not acting as resistance anymore, it also told us that this was a refined J-hook pattern, that you had more upside. It also told us we had kind of a fry pan bottom, and notice what it did today. Still bullish move right at this level, and the bullish move is accentuated by the fact that it did a bullish doji sandwich, implying there's more upside. So now we can make a quick visual calculation that maybe this trajectory is our next target. That same scenario of using candlestick signals and patterns to go short is just as easily recognizable. For example, on FTCH, look at the left-right combo right here at the 50-day moving average. First of all, when it got up here, indecisive trading, a doji, indecisive trading, a hanging man, followed by a bearish left-right combo, all right down here at the 50, with the additional evidence that there was weakness here because of the analysis of the overall downtrend. What was it going to do here at the T-line? It could have come back up and did a bullish J-hook bobble breakout. However, with it trading lower on this day, now not only do we have a sell signal followed by a bearish doji sandwich, makes our next analysis that it could come back down and test this downtrend. But a major benefit of candlestick analysis is recognizing the signals that tell you there's been a dramatic change of investor sentiment. As we saw on MLNT, this is your bullish best friend, a doji, gap up with a strong signal. Then we had consolidation, not unexpected when a stock goes from 2 to 7 in 2 days. But today, you could see that there was bullish confirmation that the profit taking was over. allowing us to analyze what is likely to happen after a best friend gap up type signal. They go into a trend which we call a 45-degree, which is usually a steady upside potential. In this case, that steady upside potential could have big percentage returns in a stock that went from 100 to $1.50 over the last 18 months. If the new activity or new interest comes in, this upside potential could have big percentage moves. And that's the benefit we have with candlestick analysis, is all we're doing is identifying graphically when there's been a major change of investor sentiment. That'll be it. We'll see you in the chat rooms.